U.S. stocks suffered their worst day in 3 weeks on Thursday as a brief respite in the bond market evaporated. Oil prices surged on tensions with Iran, and Walmart's disappointing sales outlook raised fresh concerns about the American consumer. The S&P 500 fell 0.9% to 7641.16, marking its fourth loss in 5 sessions since setting an all-time high last week. The Dow Jones Industrial Average dropped 703.84 points, or 11.3%, to 52,759.21, and the Nasdaq Composite sank 263.92 points, or 1%, to 26,067.17. Treasury relief proves short-lived. The sell-off followed a single day of calm after Treasury Secretary Scott Bessent announced Wednesday that his department would at least double the size of its planned purchases of longer-term treasuries from September 9th through November 4th. That move had briefly pulled yields lower after the 10-year Treasury yield hit its highest level in more than a year, and the 30-year yield returned to levels not seen since 2007. By Thursday, yields resumed climbing. The 10-year yield rose to 4.70% from 4.65% the prior close, nearly erasing the relief rally entirely. Analysts noted that the buybacks are small relative to the overall Treasury market and do not address the fundamental concerns driving yields higher, chief among them that U.S. government debt topped $40 trillion on Wednesday, just months after crossing $39 trillion in April. Oil surge and consumer cracks. Brent crude climbed 2.4% to $93.78 per barrel for a fifth consecutive session of gains, as uncertainty persisted over when the conflict with Iran would allow oil tankers to freely exit the Persian Gulf. President Donald Trump threatened Iran late Wednesday with what he called the most crushing economic operation ever taken against any country, but provided few details. Walmart fell 9.2% for its worst session in 4 years after an important underlying measure of revenue growth slowed again even as headline profit and revenue beat expectations. Advance Auto Parts tumbled 24.5% after its CEO said tighter household budgets constrained spending more than we anticipated. Mixed signals. Travel and consumer discretionary stocks declined on the combination of weaker demand and higher fuel costs, with Norwegian Cruise Line holdings falling 3.4% and United Airlines losing 3.5%. Deere was a bright spot, rising 6.9% after reporting better-than-expected earnings and signaling an acceleration in agricultural equipment orders. Abroad, South Korea's Kospi soared 5.9% after Samsung Electronics and SK Hynix jumped on renewed optimism around artificial